Yo, what up, y'all? What's the deal? So I just came. I want to make a video, update video for OKE. So let's go lurk and see what's going on OKE. So I'm gonna tell y'all this is one of my babies. So I mean, y'all shouldn't be falling in love with no stocks, but if you were gonna fall in love with a stock right now, probably be OKE, right? So OKE, last time I made the video was at $45, and now it's at the 49.51. It's ranging from 49. I'm on Robinhood right now. It's ranging from 49 to 51, right? Y'all, I just use Robinhood to look at stocks, right? I don't got no money in this account. Like, I don't have no money in this account. All right. I don't want to trade stocks on Robinhood or options. That's my personal preference. So don't ask me about it. If you ever see me post Robinhood, I'm just using them to lurk. Right. You see right here, it says $0 buying power available. I have $0 in there. All right. So moving on. The first video, OKE was at 50 bucks. I'm sorry, 45 bucks. I don't know why I keep saying that. It was at 45 bucks. And now it's at the 49.60 to $51 range, right? So it's coming up. All right. So let's see what we got. All right. So like I said in the last video, I'm expecting a small little pullback. So let's change this to the 20. I'm expecting a small little pullback, right? So hopefully we get it this week because I have more money I want to put into the stock and I needed to pull back real quick. You know, I'm not trying to invest when the RSI is hot. Look what happens when the RSI goes hot. Boom, boom, RSI hot, RSI is hot, RSI is hot. Now the RSI is hot again, right? I'm not trying to buy this when the RSI is hot. Now, because it's an investment, you can buy it when the RSI is hot, but then you just have to expect a pullback. Well, why buy it, expect a pullback, and wait for the pullback to recover when you could just wait to buy it so you can get the best price? All right. That's the name of the game for an investor, to get the best price. That's what you're trying to do. You're trying to get the best price, bro. That's it. All right. So look what happens every single time the RSI goes hot. So I'm expecting the RSI to go hot. I mean, I'm expecting a pullback because the RSI is hot, right? So when it pulls back, look how far it pulls back. Sometimes people be thinking I'm a wizard or I just know like all this crazy stuff, but I really don't. This is really common sense. All right, look at this pullback. From here to here. From here to here. That pulled back 4% that time. From this peak to this peak. Sorry, to the bottom, 11%. From here to here. 9 point something from here to here. We'll go to the very low point, 8 point something. All right, so it looks like it's going to pull back somewhere between, if it should follow the pattern that it's been following since December, it'll pull back somewhere between 4% and 10%, right? So somewhere along those lines, right? So it'll have a little pullback. That's what I'm anticipating. Now, it doesn't necessarily have to pull back to cool off the RSI. It could trade sideways. So instead of pulling back, it could just trade in a range. So when I say trade in a range, is what I mean. You see how the price is staying in this range right here? It's not going above the highs and it's not going below the lows. It's just trading sideways like that. All right, look at the RSI when that happens, right? The RSI kind of just goes sideways too. So when the RSI goes high, the stock cools off. The stock price falls back to cool off. But it could also cool off by simply trading sideways, right? So the RSI is telling you that the stock price went too far too fast. So it could slow down by trading sideways, and that'll cool the RSI off as well. So if it's trading sideways and it goes into a range like it did here, then cool. If it pulls back, cool, you know? So today's Monday, you know, hopefully it happens sometimes this week so I can go ahead and put some more money in there. So I'm trying to, you know, wait for this little pullback. If it doesn't pull back, you know, I'll just slowly start putting some money in. But I'm anticipating a pullback. Now, like I said in the last video, so if we're at 50 bucks, we're gonna call OKE 50 bucks right now. 49.61, 49.57. All right, we're gonna call it 49.50 bucks. Cool. I think I'm making an educated prediction, an educated guess that OKE is just gonna go right back to where it fell from before COVID. So before COVID, it was in an uptrend for 5 years and it was at 70 bucks. And then last March, when the market sold off, it fell from 70 bucks all the way down here to $12. And the craziest thing about this whole sell-off, they did not cut their dividends. So somebody was down here investing when this stock was $12, and they're going to get the same exact dividend as the person who was buying the share for $70. I mean, the stock for $70. You get it? So they didn't cut the dividends at all, man. That's a really, really, really strong sign for a company. So I'm just anticipating that it will get back to where it fell from, right? So with that being said, let's say you don't have a position at OKE. You're about to get one at $49, and it goes back to 70 bucks, right? You got a 40% return on your money. You put $1,000 in, you're gonna get $400. You put $10,000 in, you're gonna get $4,000. You put $100,000 in, you're gonna get 40 grand. You put $1 million in, you're gonna get 400. You put 10 million in, you're gonna get 4 mil. You get it, 100 mil, 40 mil. All right, you get it. So not only are you gonna get that, so that's the growth of the stock. So you're looking to, grow your stock by 40% or your position by 40% plus, and you're gonna get the dividend, right? So keep this in mind. The lower the stock price is, the better your dividend yield is going to be. As the stock price goes higher and higher and higher, the yield goes down lower because the yield represents a percentage of what the stock is selling for versus what the actual dividend is. So the dividend is set by the board of directors. They say, hey, we're going to pay X amount. And you can see for OKC, that amount is $3.74, right? So the board of directors say, yo, we're going to pay out $3.74 for every share that you hold, right? And then if you divide how much you're paying for the stock and the stock price, or sorry, how much you're paying for the stock and the dividend, you can get the yield. So as the stock price goes higher and higher and higher, the yield's going to go lower, right? I hope that makes sense. If it doesn't, check this math out. So the yield, or the dividend is $3.74. So if you buy this stock, OKE, for $20, right, your dividend yield is 18.7%. If you buy it for $30, that yield is going to come down, right? This is basic math, right? So think about the dude who bought it for $12. He's getting 30%. He's getting 30. If he put 100 grand in, he'd get $30,000 every single year, just the dividend. Plus, his stock would have went 4x by now, right? It would have multiplied times 4. Crazy. All right. So anyway, if you would have bought OKE, imagine you bought OKE the first time I made this video, your yield is looking like 8.3%. But now that it's at $49.69, the yield's falling. So what I'm trying to do is I'm trying to buy as much OKE as possible before that yield gets too low, right? Because I'm going to buy, and then I'm going to let it ride, right? So I'm trying to buy up the stock, probably until about, I'm probably a buyer until about $55 to $57. So as long as it's maybe even $59, 57, I'm probably a buyer until about $57. And then after that, I'm just going to let it ride, right? So my average cost per share is going to keep coming up because I'm going to consistently invest. So I'll show you my position. So right now, OKE, I have 3,420 shares, right? Which is a total of 161 grand. And I got a 5% gain. So my average cost is, oh, damn, it doesn't say right there. All right. I thought it would show you how much my average cost is. But my average cost is going to come up a little bit every time that I buy some more. And I'm going to keep buying and keep buying and keep buying until it gets to $57, right? So I'm a buyer of OKE until about 55, 57. Now on the downside, if OKE is to take a dip in price, let's say it's at $49 right now, and then it falls down to, I don't know, $32 or $34, cool. You know, like I'm buying. So let's get this on the daily chart. So if OKE falls down here, then why wouldn't I buy? So that's what's cool about investing in stocks that pay dividends. When the stock price falls, you have an incentive to go buy more, right? You're going to go buy more because you're going to get more passive income, right? So if one person buys $1,000 worth of OKE, that's 20 shares, right? If they buy $1,000 worth of OKE at $50, and the other person buys $1,000 worth of OKE at $25, then he has double the shares. He has 40 shares, right? So he's going to get more passive income, although they spent the same amount of money. I wanted to make sure my math was correct. All right, so yeah, so there's an incentive in investing in stocks that pay dividends. When the stock price falls, I'm even more of a buyer because I know I can buy more income for cheaper. You know, my dollar is going to stretch me further when it comes to me buying income. So right now I got, like I said, I got 3,420 shares. I'm probably going to triple that. So I'm probably going to end up with about 10,000 shares of OKE. So keep in mind, this is all fractal. So if you can only afford $1,000, like don't stress yourself out. Or you can only like afford $500 worth of this or whatever, you know, don't stress yourself out. You got to learn this. You got to learn the game first. And then as you start to make more and more money, then you'll understand exactly what to do with the money. So I'm 10 years deep into the stock market. So, you know, now that I'm making decent money, I know what to do with it. So if you're just, you know, still working your way up, you don't make a lot of money, but you're practicing this game, then don't get discouraged. That's perfect, because as soon as you start increasing your income, as soon as you start getting pay raises, as soon as you start developing businesses that pay you a lot of money, you're going to know exactly what to do with the money. You don't want to be in a position where you start making a bunch of money, you know, you end up with a $50,000 check and you're like, oh, what should I do with this? And you don't know what to do with it, so you go spend it, right? So if you're one of those people that are still, you know, up and coming, trying to raise your income, cool. Like buy 2 shares, buy 3 shares, buy 4 shares. Understand exactly how it works. Why are you buying it? What are you expecting to get out of it? Why do you expect it to move? How much passive income are you going to get? You got to take these things serious. So then as you make more and more money, you'll know automatically where to put your money. You know, you should be like a robot. As soon as the money touches, you should be rolling it somewhere because you already know what to do with the money before you got the money. All right. So I'm looking to triple. Like I said, I'm going to keep buying OKE until it gets to about 57. Then I'll let the rest ride, maybe even 55. But I just want to give an update on how this is going. It's moved $4 or $5 since the last video. But yeah, still in it. Still a good play. Just want to give a quick update. The next time you guys hear from me or see me, hopefully I got some more shares. Hopefully I can make some more money so I can get some more shares. That's the whole point of me working hard, is so I can buy income, get money, buy income. That's the whole thing, you know? So I work and I work and I work, and I take the money that I work for and I buy income, so then I can build up this passive income portfolio that's going to pay me over and over and over and over again without me having to do anything. So when I say get money, buy income, that's what I mean. Buying stocks that pay dividends, buying rental properties to rent out, or buying companies or building companies that you own but don't work at, right? Ultimately, you want to have this big portfolio of stocks, businesses, and rental properties that pay you passively every single month. So going to work is now a choice. That's how you buy your way out of the rat race, right? So you want to tie your money up into things that that pay you passively. So for instance, imagine this was a painting, right? Imagine this painting was worth $1 million. I get it I get it appraised, and it praises for $1 million, right? So I'm a millionaire because I have a painting that's worth $1 million, right? That's how it works. Now, if this painting that's worth $1 million, or this house I live in that's worth $1 million, now I'm just saying, right? If you own something that's worth $1 million, but it doesn't pay you passively, right? I can't go to eat with this painting. I would have to sell it to realize the money, right? So imagine this person, me, who owns this painting. I'm a millionaire. I own $1 million painting. I don't have any debts. Then the next person owns $1 million apartment complex, and they collect $12,000 a month from that apartment complex, right? And they net 10K. Let's say they net 10K. So they make $120,000 per year by owning that apartment complex. Which person, or which position would you rather be in, right? They both own $1 million of an asset. One owns a painting that pays no income, and the other one owns an apartment building that pays them, that nets them $10,000 a month. Which position would you rather be in, right? So that's the idea. The idea is that it's cool to have a bunch of money, even if you have a bunch of money in the savings account, but it doesn't pay you, right? So when you want to quit the rat race and you're trying to buy your way out of the rat race, this isn't going to get it done, right? You would need this to keep going up, 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 and then you can sell it, and then you can live off the money. That's the strategy with things like this. The assets that appreciate but don't pay you income, right? I'm strategically trying to buy things that pay me income, right? I'm strategically trying to buy me assets that pay me income, because once I have more passive income than what it takes for me to live every single month, going to work is now a choice. Make sense? All right, so that's a little quick update on OKE. The first video was at $45. Now it's at $50, $49, whatever, $49.52. Cool, it should run. We're about power hour. We got about an hour into the market close. So I'm as smart as I think I am. This is going to run right back here. We should see this go to 49.62 and then 49.99. Let's wait for that to happen. All right, so that's the whole name of the game. I'll do another update on OKE. Look at the 5-year chart. It's just trending upwards for the last 5 years. This company is strong. It's a strong company, and it's pretty dope that they didn't cut their dividends. Right, even here before in January, before the March sell-off, they were at $77. Right. So in January, when the market was healthy and we didn't have too many fears about Corona, when it was at $77, look at this. Buying at 49, 48. So it goes to, we'd be over 50%. We'd be over a 50% return. So could go to 77. I'm just anticipating it to go back to 70. Now, in the last video, people asked me, yo, when it gets to 70, what are you going to do? When it gets to 70, are you going to sell it and take all the money? Are you going to hold it and collect the dividends? So based on what I just explained about this, you should know my answer. I'm going to hold it and collect the dividends, right? I'm going to hold it and collect the dividends. That's my strategy. I'm trying to get this to 10,000 shares. Those 10,000 shares are going to pay me, they're going to pay me $3.74 a share. And boom, that just means I bought a job. So I have 10,000 shares, and each share pays me $3.74. Then I'm going to sit back and collect $37,000. But I'm going to have to triple the amount that I have in, right? So that's going to take me, working hard, creating more money for myself so I can keep buying more income, keep buying more income, keep buying more income. All right. So like I said earlier, if you only start with a little bit of money, respect the process. Don't take this lightly just because you don't have 100 grand to spend. Don't take this lightly just because you don't have 10 grand to spend, or you don't have 1,000 to spend. All you got is $200. So what? You need to be watching your stocks. You need to be doing your math. You need to be following the earnings reports. when these companies report earnings, you need to be calculating your yield on cost for your dividends. You need to take this serious because one day you're going to wake up, you're going to make more money. Either you're going to get a promotion or you're going to start a business and it's going to take off. And you need to know exactly what to do with your money before it even gets there. So then when it touches your account, it moves automatically. It moves like a robot. It moves like a system. Money comes in, money goes out. Money comes in, money goes out. I'm buying assets. I'm buying assets. I'm buying assets. As soon as the money touches, I'm buying assets, right? All right, cool. Y'all stay up, and I'll hit you with another update soon.